Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. In this video, we are going to be diving deep into one of the most powerful continuation patterns in trading, and that is the flag pattern. So whether you are trading Forex, stocks or crypto, this pattern can help you catch high probability trade setups if you know how to spot them correctly. I'm just going to be breaking down what flag patterns are, how to identify them, and the best trading strategies to use. So make sure you watch till the end because I'm sharing some pro tips to avoid false breakouts. Before we start, smash that like button and subscribe to the channel if you love trading content like this. Hit the bell icon so you never miss an update. Now, let us get into it. A flag pattern is a continuation pattern, meaning it forms during a trend, right? It forms during a trend and signals that the price is likely to continue in the same direction after a brief consolidation. Now, it consists of two parts. The flagpole. The flagpole is a strong impulsive move in the direction of the trend. And then the second component of the flag pattern is the flag, which is a small sloping consolidation that looks like a rectangle or a channel. All right, so you will notice, a consolidation, usually in a sort of zigzag move that looks like a rectangle, right, or a channel. Okay, and it is usually against the trend. So the flagpole is in the direction of the trend while the flag itself is against the trend. You can see that this is a downtrend, right? This is a downtrend, and you can see that this pattern shows that there is a continuation because you can see the breakout eventually happened in the direction of the trend. Now the breakout from the flag is what traders look for to enter a trade and ride the next move. Okay, so now we actually have two types of flag patterns. We have the bullish flag pattern and the bearish flag pattern. Okay, now the bullish flag forms after an uptrend. This example that I gave is a bearish flag. Okay, the bullish flag is just the opposite. The bullish flag forms during an uptrend, right? The price makes a strong upward move, just like how this one was a downward move and then you had the flag. But in the case of a bullish flag pattern, it's an upward move, then which is the flagpole. Then you now have the consolidation that forms the flag, right? You now have the consolidation that forms the flag. Okay, consolidation that forms the flag before you then have breakouts in the direction of the trend. All right, to continue the trend. So that is that is for the bullish flag. Then this is for the bearish flag, which forms during a downtrend. The price drops aggressively, then you have a consolidation that forms the flag in a small upward sloping channel, and then it breaks down to continue the trend. Now flag patterns work best in trending markets. Flag patterns actually work best in trending markets. So always check the bigger picture before trading them. All right, always check the bigger picture before trading them. Now let's talk about how to spot, confirm and trade flag patterns effectively. All right, the first step is to identify the trend. All right, the first step is to identify the trend. So you look for a strong impulsive move, which is the flagpole, all right, followed by a brief consolidation. Okay, the stronger the flagpole, the better the setup. Then the next step is to draw the flag. Use trend lines to connect the highs and the lows, all right, of the consolidation. You can see what I did here. The flag should be tight and orderly, not choppy or wide ranging. Okay, then the final step is to wait for the breakout. Okay, the trade setup is only valid if the price breaks out in the direction of the flagpole with a strong volume. All right. So once you have that breakout, you can then enter. You can enter the trade after the breakout, ideally on a retest of the flag's trend line. You can see what happened here. So this would have been a good place to enter a sell trade. All right. Then you can just place your stop loss above the high. That is for a bearish flag. But if it's a bullish flag, you place your stop loss below the low. All right. Then obviously you have to set your take profit. A common method is to measure the flagpole's height. The flagpole's height is a common method, okay, and then project that distance from the breakout point. But it doesn't mean that it always happens that way. So you can just use support levels as well to set your take profit for a sell trade, and resistance levels to set your take profit for a buy trade. Because you can see in this example, the length of the breakout was not as long as the length of the flagpole. Okay, so that's the reason why I say that it does not always happen that way. Okay, now flag patterns work on multiple time frames, but they are most effective on if you are an intraday trader. You can use it on 15 minutes, 1 hour, and 4 hour charts. But if you are a swing trader, you can use the daily chart and the weekly chart. All right. And to increase your accuracy, use indicators like volume. Okay, use the volumes indicator to time high volumes on breakout. Okay, which confirms strong trends, right? Strong breakouts. Then you can also use moving averages. You can use moving averages, okay, for additional confirmation. Price breaking above or below the 20 or the 50 EMA adds confluence. All right. And furthermore, you can add RSI or MACD, for confirmation of trend continuation. All right. You can see when we had a breakout in the direction of the trend, you can see RSI confirmed it, trending downwards, showing that there was bearish momentum to continue sending the price downwards. Okay. Now some pro tips. All right, to trade flag patterns like a pro. Always wait for confirmation. It is necessary. All right, do not jump in too early. Always confirm the breakout with volume. Okay. Secondly, use proper risk management. Always have a stop loss in place. All right. And then finally, avoid overlapping consolidation. Okay, the flag should be clean with a clear breakout level. All right, you should always have a clean flag with a clear breakout level. Okay, now some mistakes to avoid include entering before the breakout. Now many traders get trapped in false moves, right? So you should always enter you should always enter after the breakout has been confirmed. So do not just enter before the breakout. Okay, and then do not make the mistake of ignoring market conditions. Flags works best in trending markets, not choppy markets. Okay, and then always make sure you set your stop loss properly. Do not set your stop loss too tight. Give your trade enough room to breathe. If you enter a sell, set your stop loss above the high. Give some pips above the high. Do not set it at the high or very tight. All right, set it some pips above the high. If it's a buy trade, some pips below the low. Okay, now that is a wrap. Okay, now you know how to identify, trade, and master flag patterns like a pro. If you found this video helpful, smash that like button and drop a comment below with your questions or experiences trading flag patterns. Subscribe to the channel for more expert trading strategies, and don't forget to hit that notification bell so you never miss an update. In the meantime, thank you for watching, and I hope to see you in the next video. Happy trading.